Hey guys, Ryan Dement, True Podcast. I hope you're having a great day. It is crazy out there, and inflation came in today, 6.2%. It's hotter than you know what. But guess what? I'm here to tell you there are ways around it. Stay tuned. All right, guys. Inflation numbers came out today, 6.2%, which excludes the volatile markets of food and gas, where we're paying the most. A good article came out from CNBC that stated real average hourly earnings when accounting for inflation actually decreased 0.5 for the month, and 0.9 inflation increase negated the 0.4 wage increase, which means you're losing money. We're losing money. But there are ways to hedge inflation. You know, there's two things that are going to come out of this. One, the Fed is going to start raising rates, which will allow you to then start seeing a better savings rate so you could get some money there. Or two, you could start investing in hard assets, gold, silver, oil, gas, real estate. Those two areas need to be your focus, because ultimately you can't get around buying food, buying gas, and traveling. And traveling, if you haven't looked recently, to travel around the holidays has gotten crazy. I just put a ticket on hold today for my normal flight to Texas and Indiana, and it's up over $150. I'm close to $500 for a flight that was $350, $323 pretty consistently. And now I fly into a smaller hub, Evansville, Indiana, in southern Indiana. And United is now cutting off flights there because they don't have enough demand and it's costing them too much. I fly American, but God, I want to get off of them and go somewhere else because they're horrible. Here's the thing, guys. Inflation is here to stay for a while. Even though El Presidente says he's going to pull all these levers and things are going to change, it doesn't matter if you're on the left or the right. Politicians, when they're talking, they're lying. So it doesn't matter. I don't care if you're Republican or Democrat. They're all liars. At the end of the day, they're in it for themselves, and we have to solve it for us. So two things that I'm going to do, and I'm going to focus on these things in this video. One, find ways to cut my expenses so I can live on a more frugal budget. I don't need the lifestyle that I had before. And even going through this whole journey of being an entrepreneur, I've cut my budget way back, but I think I can cut it even further. I'm starting to look at all of my different streaming subscriptions and starting there. Some of these are worked into other bills, like T-Mobile pays for some of them. I'm not being charged for them, so I got to see how that plays out. But I do have other streaming services that are outside of T-Mobile. And can I eliminate those and reduce my costs? Yes. That's one area that I'm looking at. The second area is going to be energy. You know, I live in Phoenix. We don't have to use our heater very much yet, but we will. Is there a way that I can adjust my heater to where I'm not too cold, but I'm also saving a few dollars? So I've got to figure out that and what to put that thermostat at. But the other thing is, in your house, turning off your lights and doing a few other things can help also and go a long ways. People think it's crazy, but it does help. The other thing is, do I have any unnecessary spending? Am I going out to eat? Am I buying things on a whimsical? Which means in turn, am I paying cash for them? I hope I am. Or am I putting them on a credit card and racking up debt? And that'll be another topic we talk about, is debt and inflation. Because your money is not going to go as far as it did before. So you're going to feel a little bit more of the pain and pinch if you're carrying a lot of debt. All right, guys, housing, inflation, they don't go very well together, especially if you're trying to buy a house right now at the top of the market. The Federal Reserve is coming out and saying they are going to start raising interest rates. They say next year, but if we continue in this pattern of inflation growing at these very high rates, they're going to have to do something sooner rather than later. So if they start raising rates, that means these very affordable mortgage rates at 2.75, 2.5, 3% are going to go away. And that means your dollar will be stretched even further, which means, unfortunately, you might be priced out of the market. And I'll give you an example. I bought this house. If you haven't seen all my videos or my podcasts, we talk about my house. And when I bought it right out of the pandemic, and then since then, the builder, Lennar, has closed another 80 houses. Well, I went from 275 and now they're closing houses close to 4. Well, people are literally buying the house and flipping it, and up the street at the end of the cul-de-sac, or at the end of the street, the last house on this block sold one day, and the following day was listed for $125,000 more at $465,000. And then it went pending 2 days later. And so we're just waiting to see what that happens. But that's just the icing. That's not even the icing on the cake. The icing on the cake is one block over, and I'm pointing like you know, duh. One block over, a house that just closed literally a few days ago, closed again, went back on the market for $495,000 and it's pending. So we'll see where that goes. The market is crazy and people know that it's coming to an end, and they're FOMOing right now, fear of missing out, and they're paying these top dollars. I hate to break you the news. Sooner or later, things do come to an end and they do come back around, and your house is not going to keep that value over time in a short period of time. Maybe over the long term it can come back. Who knows? The markets do correct. But at the end of the day, inflation is not helping the housing market, especially since we have such a shortage. It's just causing even more of a panic. If you're looking to buy a house right now, slow down, relax, wait the market out a bit, see where it goes, see where inflation goes, and what the Fed is doing. Because ultimately, why do you want to be house poor and be strapped with a mortgage payment you can't afford when you want to enjoy life? It just doesn't make any sense. Literally, dollars and cents. Just be patient, wait it out. If you're renting, put extra money aside. Put it in a savings account or something. If you enjoy trading stocks, trade stocks if you want to. If you want to put it into hard assets, gold, silver, oil, gas, real estate, invest in real estate funds. Those are out there too. Just don't throw your hard-earned money away because you feel like you're missing out. Let the market come back and let it make an adjustment and see where interest rates go, see where inflation goes. Because I don't know about you, I don't want to pay $18 for a T-bone steak. And that's about what they're going for right now. I don't think any of us want to do that. But just don't be crazy with your hard-earned money. It's not worth it. All right, guys, that's it for this week. Please like, share, comment. If you don't watch us or don't listen to us, I should say, on our podcast, please look us up, True Podcast. We're all across all the platforms, wherever you can buy your wherever you can listen to your podcast or download it, it's there. Thank you for the time. Stay safe, stay healthy, have great conversations. It's okay to disagree. I'll see you guys on the other side. Have a good one.